Welcome to Insights. I'm Eric. I'd like to do an open review on gold. As gold gets pounded here today, I'm sure a lot of people are kind of giving up on it, and I would have to say that this is an expected outcome. We've talked about gold and silver for quite some time relative to its specific setup within the evolution of the trade, and I've long stated that this was going to be a frustrating period, and that's exactly how this is playing out. Frustration can be a choppy upward grind, and it also could be, actually straight down, and you throw in the towel. So let's open up a restricted access matrix here for others to watch. If subscribers want to pull theirs and down, they can look in detail. I'm not going to go into as much detail as I normally do within a review, but we're going to talk about the evolution of the trade in gold in particular. And I've place silver on the down below just as a reference point to suggest that the setup is relatively similar. There's not going to be any advice of how this is going to flip. I will talk about what it's going to take to flip this, but then we're going to leave that to people who subscribe to the matrix to follow the energy builds in the end. The evolution of the trade follows the primary trend, and the primary trends discussed here or revealed here in the monthly column. There's the monthly, weekly, and daily time frames. The computer studies all three of them simultaneously. The monthly trend for gold has been up for 26 months and produced a 37% return, and that's fallen pretty fast here. It was higher than that a while ago. The problem with gold is really not the cycle. 26 months, it's just barely at its mean. And the price cycle is no longer above zero, so this is what it generally does within a normal impulse. But the problem that lies, again, other than any of the time frames, all the time frames in the daily time frame is pushing downward, is really this energy build. And energy builds is basically the invisible hand's direction of whether or not it's accumulating or distributing. The majority of investors just follow price action. They're lucky they concentrate a little bit on volume. They don't really follow any of the cycles, and they certainly don't follow energy. And energy is the problem. It's what's going to hold gold and silver back. Gold's got a bigger energy build than silver, and I can talk about that later, but I'm not going to address that here. But this is the frustration phase for gold will continue until this energy build dissipates. So let's quickly look at that and what it's going to take to dissipate that move. So we open up the specifics. Normally you'd click on this link right here to see these charts and these links that pops up in the cloud, but I'm not going to access those. I'm going to look at the ones that I have. They're more dynamic. But right here, this is gold's DI, which is its energy. It's what suggests that the invisible hand is, or the DI 1 and 2. DI is the short term, and DI2, which is yellow, is the longer term. And we're pinned way down here. We've talked about this quite frequently. The invisible hand is just distributing where it needs to flip this energy build from a bear situation to a bullish situation. It's going to take time. And I referenced these white arrows before, or I've shown similar setups that this market's going to look probably like 2009 and 10, when the energy build was quite bearish, and then it took over a period of several months, it took some time before the bearish energy build dissipated into a bullish one, which then set up the market for a faster run to the upside. This period, this arrow that goes across, which is also marked by this one had more of an upward bias. This one's for now is downward, but that can still resolve itself by moving back towards the zero line. It marks the frustration period, which I've often described this setup. But ultimately, it took several months for this move for the DI, DI1 or DI and DI2 to move higher, and DI1 in particular, or the primary DI, to push above 60%. And that's what you're going to have to wait for. So that's what I encourage subscribers to do, and anyone who's looking at gold who thinks that they're going to time this without knowledge of where the energy lies is probably just going to join the majority into frustration. What are you going to do? You're probably going to at some point mischaracterize the decline as gold's behaving as some sort of asset or replacement for bonds. you'll find some explanation that fits why it's doing what it's doing, but in reality, it's just dealing with this bearish energy build, which will at some point flip, and when it flips, there'll be nobody will be on board, nobody will be ready for the rally, with the exception of the select few that followed the invisible hand. And hopefully that includes all the subscribers and everyone else who's watching this video who says, boy, I need to watch this. So let's return quickly to the matrix before we end this quick review. We can see that this is the matrix representation of that energy build. We can also see that WA here is near zero, which means there's no one in this market. This is a market that's flush, or it's primed for a flushing. It's also a market that's highly compressed across multiple time frames, which usually means there's a fast break to the downside. We had talked about this a few days ago with subscribers, and that's exactly what we saw today. Another sharp decline. Eventually this will get resolved and this will enter expansion, but it's really not going to do anything until this energy build moves. And you can see that the energy build in silver is not too much different than gold. So ultimately, patience is the way to play this. If you're long gold, you're going to be frustrated. It also means there is no play shorter term. I would be patient and wait for this energy build to move. The computer will update this every week, and I would log back on to find out what it's saying to us. It will take time, maybe a month. It could be short over a span of weeks, but it could also be as long as multiple months. If you have any questions about how the evolution of the trade works, how to use the matrix, contact me through the blog or underneath, down below this video. There'll be some links that'll take us back to the blog and various social media outlets, or you can comment below the video or subscribe or like the video or do whatever you like. But ultimately, if you're interested in the precious metals complex, your goal should be following energy, and I hope this video enlightens that viewpoint that energy is different than price and volume. It's a separate calculation. It's a separate concept altogether. So thanks for watching the video, and don't get too dejected by watching gold.